Hi there, and welcome to the next episode of CEO Conversations. My name is Shelly Weir. I am the FICPA President and CEO, and I'm here today with one of my dear friends, Mindy Rankin, who is a partner at Warren Averett, has also been a longtime member of the FICPA Board of Directors. And in addition to all of her accolades professionally, she has also become really one of the foremost disaster relief authorities in the tax practitioner space here in Florida for our CPA community. She herself has lived through multiple hurricanes, both as a practitioner and just a citizen of Florida, in supporting the community and supporting her clients, and was recently appointed to the AICPA National Disaster Relief Task Force as well. So we thought it would be a good idea in the wake of, unfortunately, Mindy, another busy hurricane season that we've had here in Florida with two back-to-back storms, obviously three once we add in Hurricane Debbie from earlier this summer. And there are just so many questions pouring in from our members about how to handle this from a tax perspective. So we thought we'd film just a quick 10 to 12 minute video and give you the highlights of the top 5 things you need to know right now coming out of these storms. And obviously we are here to help and dive deeper onto any of these topics as you need them. So Mindy, thank you so much for being here today. And you have really become the guru for us here at FICPA and helping us navigate all of these storm issues. So thank you.
Thank you, Shelly. I mean, going through a Category 5 hurricane and you learn so much. I mean, this is just my way to pay it forward. I just want to help my colleagues recover and just try to help them navigate the process. So thank you for having
Absolutely. Me. My pleasure. Okay, so we've got 5 things. We're going to try to fit everything we can into 5 buckets here. And I think first and foremost, let's touch on the new extension deadlines. So I'll just say at a high level, on behalf of FICPA, this is really the core of what FICPA does for the profession. It's to advocate on your behalf. And whether that's in Tallahassee or Washington, that is our job, is to protect and promote the license. And so when a storm is hitting, we are before the storm, during the storm, and after the storm on the phone with the IRS, with FinCEN, with our State Department of Revenue, securing the necessary filing relief, depending on where the storm is hitting and what counties have been impacted. So we had a little bit of a complicated situation for a few weeks in between Debbie and Helene, and then Helene and Milton, but things have gotten a little bit clearer. And so the entire state of Florida right now is under a tax extension from the IRS until May 1st. You can find all of the information with the IRS press release and a detailed look at the different maps on our website at ficpa.org. If you don't see it right away on the homepage, just click at the resources button on the top of the page and you'll see the hurricane resources right there at the top. With FinCEN as well, we have also secured the necessary FBAR filing relief. What has not been yet secured from FinCEN is beneficial ownership reporting extensions. As our members are likely aware, we are supposed to have reporting filed within 30 days of the business being created to report that activity to the Department of Treasury. We are working in consultation with the AICPA and other state societies around the country to see if we can have extensions in the wake of natural disasters be included in the BOI reporting at the same way that they are with the FBAR filings. And then last but not least, we just released yesterday the updated State Department of Revenue extension deadlines. Again, we've got some county by county maps and the appropriate news releases listed on the ficpa.org website. If you have any questions, by all means, please reach out to us. So Mindy, we talked about the extensions and the dates and where they can find information. And now let's talk about item number 2. Which is the list of everything that has been postponed due to a disaster. Can you speak to where they can find that information in the RevProc?
Yeah, RevProc 2018-58 has all of the things that are postponed. by the extension deadlines. One of the things that's important to remember too is if you are located and the client's books and records are located in Florida, but they have an address that's outside of the disaster zone, you can always call the IRS hotline. There's a special disaster hotline, and they actually have some agents. They've increased the number of agents that's going to be working that line. So make sure that you're proactive, and if you have anybody that doesn't have an automatic with their address through the IRS system, that you are proactive in getting them those extensions. But just remember on that Rev Proc 2018-58 that W-2s and 1099s are not included, but 941s are. So you just have to keep that in mind. It has an entire list of the postponements. There's a ton of stuff that's postponed, like elections and stuff like that. So just make sure you get familiar with that Rev Proc.
Great question. And that's probably the most commonly asked question that we're getting right now after when the deadline has been extended to is what's included in it. So that Rev Proc is going to be a really important resource for our tax preparers at this time. Okay, the next item, number 3 on the list, Mindy, one of our favorite topics, qualified disaster versus non-qualified disaster. And really understanding the difference between those two distinctions and how crucial that is for the tax treatment. And let me just start. I'm going to have you answer the question. This is a federal issue. It is something that we fight for with each storm, but the way that things are kind of drafted right now statutorily at the federal level, it's not quite as easy as securing some of the IRS extensions and things of that nature. So can you explain the difference?
So qualified disasters are basically where you can actually take your casualty loss without itemizing. So you can add your casualty loss to the standard deduction, which is huge for individual taxpayers. And also another piece of the component for qualified disasters is that you do not have to subject it to 10% of your AGI. So those two pieces are huge. So you really want your hurricane to be qualified. But the problem is that has to be passed by Congress. So the last hurricane that was included, anything that happened between like 2017 and early 2020 was included. So Hurricane Michael was included. So we did benefit from the qualified disaster. But there's certain hurricanes, especially there's some in Louisiana and also Hurricane Ian, they have not been qualified. So those do not get the preferential treatment that the qualified disasters get. So I really want to encourage you to contact your local congressman and say, we really need these disasters qualified. There are some current bills and some proposals that are being worked on where they've tried to get these disasters since early 2020 qualified because there's California wildfires. There's all kind of disasters that have happened since then. So I think now, especially with these latest hurricanes, there's going to be a bigger push and more states involved. So I do think I really hope that Congress does come around and pass that because it really does help individual people recover from catastrophic damage.
I completely agree, Mindy. And I still get questions to this day from members about Hurricane Ian and why it hasn't been qualified. And again, that takes congressional approval. And with the backlog in Congress as of late, just in the political landscape, it's been very, very difficult to get any type of legislation through. I want to give a special shout out to Representative Stubbe from Southwest Florida, because he has really been a huge champion specifically for Hurricane Ian and getting that one listed as a qualified disaster. And while we haven't been successful yet, he has been just a major champion for Florida and trying to get that issue pushed through, and in many ways has been more successful in getting it further along than even some of the other storms that have hit other states. I will also share, and we'll have more information in the months ahead, but the presidential election will obviously have a huge impact on what type of tax package we might see at the federal government level. But either way, we are advocating for, in partnership with the FICPA and the disaster task force that Mindy is on, for some standardized federal disaster relief language so that we don't have to keep facing these same challenges with each storm. And that would include the designation of the qualified disaster, as well as some automation processes with the federal agencies in the wake of these disasters hitting, versus us having to ask and then wait for extensions to be announced. So be sure to keep a lookout. And to Mindy's point, especially once a piece of legislation has been filed, contact your congressman, let them know how much you are in support of this and what it means to you as a practitioner. And in the meantime, continue to advocate to have Helene, Debbie, and Milton all issued as qualified disasters. Okay, Mindy, I'm going to turn this one over to you, but item number 4 on our list would be how to calculate and reconstruct cost basis for tax purposes. What advice can you offer there?
I think one of the biggest things that we struggled with during Hurricane Michael was remembering how much you paid for your house. Like, what is your cost basis? So for individuals, it's much more difficult. For businesses, you have your depreciation schedule, so you generally have your cost basis. But that's one of the first things that you start with when you're calculating your casualty loss. You know, your casualty loss is the decrease in fair market value before and after the storm, but it's also limited to your cost basis. So it's important that you try to tell your clients now to start thinking about that. Did they make improvements over the years? You know, how much did they pay? Did they build their house? You know, a lot of times in storms, a lot of that documentation gets damaged, or you end up having to throw it out because it's flooded or whatever. So I did have and went through an IRS audit with a client, and the cost basis was very important to the agent. So luckily we had all the documentation and we did limit the loss to the cost basis. So it was no change. Everything went well. But that cost basis piece is really difficult, especially if you have a lot of older homes in your area or something like that, where people bought the homes a long time ago. So it's very important that you try to, use records. You can go online and look for permits that were pulled. The IRS agent actually went on to the Bay County website and saw where he had made improvements and saw that the permits were pulled for improvements. So the improvements that we listed for the cost basis were supported by evidence. So starting now, just remind your clients, we're going to need the cost basis of your boat that you lost. We're going to need the cost basis of your house, everything. So go ahead and tell them to start working on that.
That's a great tip, especially now in the wake of what we've just gone through. Just go ahead and get prepared for next year and the year after and the next storm while it's fresh on your minds. Okay, Mindy, last one of our top 5 things to know is using the insurance safe harbor methods available for individuals. We know that the IRS provides safe harbor methods to simplify these calculations on casualty losses. So what would you advise that your fellow CPAs do in that situation?
We definitely, for Hurricane Michael, we relied a lot on the safe harbors. I think there's a 6 total, and I won't get into the details of that today, but I definitely think you need to become familiar with them. In a lot of cases for those safe harbors, you can use the insurance paperwork. So if you have a client, an individual that has damage to their home and the insurance company says, the damage is $100,000, you can actually rely on that. So instead of having to get an appraisal where you get the drop in fair market value, or using actual repair as your drop in fair market value, which is allowed, you can sort of just use the insurance paperwork. Now, I will caution you, there are some things to be on the lookout for. A lot of times your insurance coverage does not include trees, that doesn't include your dock. There's a lot of things that the insurance doesn't cover. And so you can't use the insurance safe harbor method if obviously you don't get a damage report from the insurance company. So you kind of have to keep that in mind. It's kind of a case by case basis. And I know, I just mentioned the appraisal method. If you think that you're going to have a very long time before you're going to get repairs and it's going to be a nightmare, and you think that your insurance company isn't cooperating or something like that, you may want to go ahead and get an appraisal done. You can get an appraisal done for the value before the storm and the value after the storm. And those actually do hold up in audit as well. We had one client that got audited and they produced the appraisal and said, it was going to be years before they could actually get their drop in fair market value if they relied on another method. So they did go ahead and get an appraisal done. So if you have a big, beautiful lot with trees and stuff like that, the insurance is not going to cover, then you may want to go ahead and try to get an appraisal done and use that for your casualty loss.
Great tip. Okay, so just to recap, 5 top things to know in the wake of Hurricane Milton and Helene. Pay attention to the new extension deadlines for IRS, FinCEN, and the Department of Revenue. Again, we have the county by county maps as well as the corresponding press releases from those agencies, all available on the FICPA.org website. Make sure you've got Rev Proc 2018-58 handy. That has the list of everything that is postponed due to these disasters. Pay attention to what is a qualified disaster versus a non-qualified disaster. Again, to reiterate, Hurricane Ian is not yet listed as a qualified disaster, nor is Milton, Helene, or Debbie. We will continue to advocate to have those storms included, but for the time being, treat them as a non-qualified disaster. Mindy gave some great recommendations on how to calculate and reconstruct cost basis for tax purposes, as well as our last tip, which is to use the insurance safe harbor methods available for individuals. We know it's a very difficult time right now, and we know that you probably could spend hours on the phone with Mindy, asking questions, navigating different decisions that you have to make. I just want to reassure you that we are here to help in any way we can. I'll also flag that on October 23rd, we will have part 2 of our webinar series with Jerry Schreiber, who is the National Tax Disaster Relief expert. He is the master of disaster, as we call him in the CPA community, and can help guide you through any additional questions that you have. So if you have not yet registered for that webinar, please go ahead and do so, and we will make that recording available online on our website as well. Mindy, I can't thank you enough for all of your expertise and leadership and guidance during this time. Do you want to just share where folks can contact you if they have any questions?
Yeah. My email address is mindy.rankin@warrenaverett.com. Just feel free to reach out. I have people that I've helped all over the state, especially with Ian. I got a lot of emails. I don't mind helping. I want to pay it forward. I feel like I had to learn so much. And like I told Shelly, we had a lot of tears that tax season. I mean, it was so hard because I'm not kidding. Every single person that lived in Bay County had a casualty loss, or in some cases a casualty gain, but we had to make the calculation on every single client. So just, I have a real quick story. I know I've told Shelly this before, but right before Hurricane Michael hit on October the 10th, me and my 2 partners at the time in our Panama City office were sitting in Waffle House eating because we had the October 15th deadline coming up. And we actually weren't sure that we were going to get relief because back then it wasn't as fast. It didn't come out as quick. Like, we were kind of panicking. And so anyway, we all, of course, sent our staff home, but we got home and evacuated at the last minute because it turned into a Category 5. But I just want to thank Shelly and her team, because that is not the case anymore. Like, we know that we're going to get relief, and you can go about preparing for the hurricane and evacuating your family, and you don't have to worry about tax deadlines, a couple of days before, because Shelly and her team worked tirelessly to make sure that those come for you and your clients. So thank you to the FICPA for that.
Thank you. My pleasure. And thank you to Mindy for always being there to answer my questions too. And Mindy, you are right. Even in the absence of power for most of the FICPA staff between these 2 storms, we were still on the phone and on the line, and it's our pleasure to do it. So everyone, I wish you well. Be safe. We'll see you on the next conversation, and don't hesitate to reach out if you have any questions. Be safe and be well. Thanks.